reports that Nigeria's state oil company, the NNPC, recorded a 5.34 billion naira as under recovery cost for fuel in June made headlines over the return of petroleum subsidies. The NNPC has clarified its position and says the fund was the differentials of the verified stock of the Petroleum Product Pricing Regulatory Agency. To put this in perspective and share his outlook for the oil sector is Adetunji Oyebanji, MD and CEO Double One PLC. Joins me for this conversation. He is also the chairman of the Major Marketers Association of Nigeria and chairman of the Downstream Group of the Lagos Chamber of Commerce and Industry. Adetunji, a pleasure to have you join CNBC Africa for this conversation. Now, just months after it changed its pricing method in an effort to eliminate subsidies, the NNPC's latest report now shows a 5.34 billion naira under recovery bill for June. Just help us understand what your thoughts are on this.
Good afternoon, Christy. Great to be on the show. I think the NNPC tried to explain the circumstances that led to that particular $5.4 billion naira issue. That had to do with the inventory losses that would have occurred because of the reduction in prices at the time. However, going forward, we still note that there's still an element of subsidy, because when you look at the prices that were posted for the month of August, for instance, NNPC is still retailing gasoline at 145, when really the price should be closer to 155. So obviously there's still an element of subsidy there, which needs to be clarified.
Now, Adetunji, where is this confusion coming from? If you could just help us to clarify. Ever since the news of this report broke in the last 24 hours from the NNPC, we have had varying views, most of the time contradicting and opposing the NNPC's position from most of the marketers. What really is the situation with subsidies in Nigeria at this time?
Well, like I did say earlier, when you look at the prices posted by NNPC for selling gasoline at its resale stations, you find it at 145. But if you look at the template that PPRA has been using in setting prices, you will find that if you just apply even the official exchange rate and the Platts for the month of August, you will find that prices at the pump should be significantly higher than where they are today. So obviously, something is not clear as to what really is happening. We suspect that there may be some issues to do with how margins are being applied to the various operators and the various subheadings within the template. So we continue to work with government to try and get clarification on this subject, but definitely it is very clear that there's still an element of subsidy.
Okay, now latching on to your last few words, they're saying there are still some elements of subsidy. Just help us understand, what will an eventual outright removal of subsidy mean for bottom lines of marketers and the downstream sector in Nigeria?
Well, we always try to make the clarification that in the immediate, margins are probably more important in terms of looking at the bottom line of operators. We've continued to engage the relevant agencies of government, particularly the PPPRA, in terms of getting an increase or improvement in the margins that we've had, which have been stuck. First, they were changed in 2008, then they were not touched again for another 8 years, and we're trying to get an improvement of that, because that would directly impact our bottom lines. However, having said that, we believe that when subsidies are removed and you allow for fee price liberalization, which means that the market will fix the prices at the pump, then that will allow full cost recovery by all the operators. And with that full cost recovery, it means that more investment will be attracted to the industry at all levels of the value chain. And if that happens, then that means more employment. It means growing the economy. And ultimately, it can lead to the fact that Nigeria can become a refining hub for West Africa and Central Africa and earn more foreign exchange for the country. So it's all linked together. You remove the subsidy, it allows the market to determine prices, and that will allow for full cost recovery for all players in the industry. So government needs to really take that step of, beyond saying subsidy has been removed, to go and move things to the state of full price liberalization. That is what we have continued to engage them on, and hopefully very soon we'll be able to get there.